Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to CSC. Good evening. Today is Tuesday, November 11th. I'm analyst Jiang Jidao. Please help us by liking, subscribing, and sharing. If you have any investment questions, feel free to leave me a comment. If there's anything we don't have time to discuss today, I'll analyze it for you in tomorrow's class. Of course, as we know, the typhoon is about to make landfall. Whether you live in the north or the central and southern regions, everyone needs to be well prepared for the typhoon. I just saw the latest updates, and it looks like the central and southern regions have already announced work and class suspensions. Basically, everywhere south of Taichung has suspended work and classes. However, in the greater Taipei area, like Taipei, Hsinchu, and Taoyuan, everything is operating as usual. Now, you might wonder if there's a chance for work and class suspensions in the north on Wednesday or Thursday. At the moment, honestly, the chances seem pretty slim. So as long as the chances are low and the Taipei stock market continues to open, and as long as the stock market keeps trading, the Yuanta Good Evening program will continue to meet everyone online, both in the morning and at night, as usual. Alright, let's get back to today's investment highlights. Hello everyone, this is Anna. Xiaolong, hey, Xiaolong, you left a comment with a question right at the end of yesterday's show. We'll be talking about that and related topics a bit later on as well. Alright, and we'll also discuss the government shutdown issue later. Good evening to Alice, Food, and Ray, and Yumiko. First, let's look at today's investment highlights. First, the appropriations bill is expected to pass. Of course, this is closely related to whether the US government will remain open or shut down. Today, I'll give everyone an update on the current status of negotiations in both the US House and Senate. It looks like things are moving in a positive direction, so I'll share more in a bit about what the Speaker of the House, Johnson, has mentioned and what kind of messages he's conveyed. In addition, Warren Buffett, the Oracle of Omaha, released what could be considered a farewell letter today. It's his final letter of gratitude to his children and shareholders. In it, he talks about some related investment directions and strategies, and even shares new thoughts for shareholders and for the new CEO, Abel. So, Buffett's farewell letter. Today, we'll chat a bit about Warren Buffett. In his past history, as well as in this farewell letter, what kind of messages did he mention? As for the industry side, of course, what's more important is the Magnificent Seven. The last of them to announce earnings, NVIDIA, is expected to release its financial report in the early morning of November 20th. Looking at the Magnificent Seven now, 6 companies have already announced earnings, and the only one left to report at the end of November is NVIDIA. This mother hen with Taiwanese capital has shown strong revenue performance. Many investment institutions, including Bank of America Securities, have raised their target price for NVIDIA. They believe NVIDIA's revenue and profits should again exceed expectations. But what about the chick NVIDIA is leading? Who is this chick? It's CRWB, CowWeb. CowWeb's earnings report was also released yesterday, and its performance was solid and commendable. However, they lowered their full-year revenue outlook. So, what exactly went wrong? If you hold NVIDIA or even CowWeb stocks, how should you view this situation? On another note, let's talk about something a bit lighter, Starbucks. We all know that Starbucks loves to promote their buy one get one free deals. But today we're not here to talk about buy one get one free deals, because unfortunately, there haven't been any of those promotions lately. So what's been happening recently? Well, there's been a strike. This strike could end up being the largest one ever during their annual Red Cup event. Will this strike actually happen? And what impact will the strike have on Starbucks afterward? Today on the show, we'll break it all down for you. Of course, the most important thing in the market right now is news about the US government shutting down or reopening, and even after reopening, how to respond to the economic data that's released. We'll be discussing all of this with you today. Hello everyone, welcome. Jolin Yij means, I love Jolin. Jolin 2502, good evening. First, let's look at something. Besides the 9 p.m. data tonight, there was a release at 7 p.m. The NFIB Small Business Optimism Index for October in the US just came out. This data has a neutral impact on the stock market, so basically, everyone is taking it in stride. It doesn't have much impact. The previous value was 98.8, the forecast was 98.5, and the actual value dropped to 98.2. Besides this data, no major economic reports tonight to affect the market. At most, tomorrow we'll have the OPEC monthly report, which is related to oil and crude oil prices. That will have a more direct impact. The bulk of the important data will actually come out this Thursday and Friday, so you should pay special attention then. If the US government really does reopen as scheduled, there may be a few data releases afterward that everyone should keep an eye on. Also, let me answer a question from one of the students. Yesterday, Caesar, I'm not sure if Caesar is online right now, and to those in the Philippines, good evening. So, Caesar, yesterday you asked if both the US and Taiwan stock markets are at historical highs right now, and what position size is appropriate. You also asked if it's still wise to chase stocks like Micron and SanDisk. Let's break this into two questions. First, how much of a position is appropriate right now? Given the current levels of the Taiwan and US stock markets, which are at historical highs, I would recommend keeping your position at around 50% to 60%. Maintaining it at 50% to 60% means you at least have a basic long position for a medium to long-term layout. It's good to have a basic position, you need to maintain a fundamental level of holdings. But should you go all in, like 80%, 90%, or even 100%? I don't think now is a great time for that, there's no need to be fully invested. The most you might do is have 30% to 40% as a medium to long-term position, and then keep the remaining 10% to 20% for short-term trading. As for short-term trading, what exactly does that mean? For example, take Micron. Micron performs well because it has solid fundamentals, its revenue, business prospects, and profits are all good. The key point is that companies like Micron, SanDisk, Samsung, and SK Hynix are all in this group. Why do their stock prices keep hitting new highs? A huge reason is the booming AI sector and the rapid growth of the AI market, which drives demand for things like HBM, the so-called high-bandwidth memory. When it comes to high-bandwidth memory, if a company invests heavily in this area, it will definitely boost the performance and efficiency of AI development and computing. So, for AI companies like Nvidia and others, when they're developing GPUs or building out AI computing and data centers and making these kinds of investments, they all need a large amount of HBM, which is high bandwidth memory. And when it comes to high bandwidth memory, there are a few major international companies involved, including SK Hynix, Samsung, and Micron. So, when it comes to these leading stocks, how should you approach trading them? You should use a short-term portion of your funds, about 10% to 20%, to trade these. How do you do it? It's simple. Take Micron, for example. Right now, it's steadily climbing along the 20-day moving average, moving higher and higher, like climbing stairs. So just remember, whenever it surges and breaks past the previous high or hits a new high, you should at least take some profits, sell off 5% or 10% to lock in gains and get out for now. Put those profits in your pocket. When can you get back in? Start buying when the price nears the 20-day moving average. For example, each time it touches this monthly moving average, the red line, once, twice, 3, 4 times, there are usually 3 to 4 chances to buy on the pullback, looking for a good entry point. Look for those pullbacks as chances to add to your position. So, for that 10 to 20% of your funds, this is how you manage your positions with these back-and-forth trades. Now, for the 30% to 40% portion, let's say you bought Micron, and your cost was below $100, or even below $120. In that case, you don't even need to touch that position. It can just become a long-term holding. By now, that long-term position could have a profit of nearly over 100%. What you should do is just keep it, and at most, you can do some short-term long position spread trades. As you make some profits, gradually accumulate 5% here, 3% there, and turn those into long-term positions. So, I think right now, the total position should be maintained at around 50 to 60% overall. Then, about 30 to 40% should be allocated to long-term positions, and 20% to short-term positions, so your total position really shouldn't exceed 60%. Now, if you encounter a situation today where, no matter if it's the index or individual stocks, if there's an unexpected, significant drop, like maybe Trump said something, or there's a US-China trade war, or some other kind of black swan event, or even a gray rhino that suddenly happens, at least you'll still have 40% in cash. And what does that do for you? After getting through the downturn, there might be a lot of good companies to buy, and you can look for those undervalued opportunities when prices are low. So that 40% in cash is meant to be used at that time. But right now, I think having 60% of your funds as your basic position is enough. Alright, so just like the earlier question about whether you can chase after stocks like Micron or SanDisk, now that the market is moving up in a stair-step pattern, can you still buy? Yes, you can buy in the short term. How? Wait for a pullback to the 5, 10, or, for more stability, 20-day moving average before clearing your position and buying lower. In today's market, the safer way to trade Taiwan and US stocks is to buy on pullbacks. Buy after a pullback. If there's no pullback, don't act impulsively. Each pullback, stay calm. You might ask, what if it never pulls back and keeps hitting new highs? Let it go. If it passes you, maybe it wasn't for you. Doesn't that mean I'll make less? No, that's not the case. There are thousands, even tens of thousands of stocks in the whole market for you to choose from, so even if you miss out on one that's surging, there are still other good companies out there. So don't worry, just remember to wait for a dip before you start building your position. That way, your risk will be lower than others, and your potential profit in the future will be higher than others. Okay. Focus on stability first, pay attention to risk first, and then think about how much you can earn in the future. This is the same approach that investment legends like Warren Buffett take. They always prioritize risk management, meaning you need to know how much risk you can handle. When you find a buying opportunity where a stock is undervalued or trading below its investment value, that's when you should start building your position. Over time, your profits will be higher than others. Much better, right? Good evening to everyone working late, and to Melissa. Oh, right, it's a good thing you told me you're working late, because with this Gmail 5709, nowadays everyone's using different accounts, so I can't really tell who's who. Alright, let's take a look at what the officials have been saying. First, Daily isn't up for election this year, but Muslim is. Daily said that, right now, inflation continues to decline, so he remains open to further interest rate cuts. Muslim, who is a voting member this year, believes that we should be cautious about cutting rates. He thinks there's no need to overreact and expect another rate cut in December, because in his view. Next, the US government is about to reopen, and once it does, the economy, the Treasury Department, and other operations will return to normal. Under these circumstances, of course, the US economy has a chance to bounce back. So he predicts that in the first quarter of next year, Q1, the economy will rebound significantly. So let's keep an eye on it. If, after the government shutdown ends, the US economy, the Treasury, and overall operations all return to normal. Whether it's economic data, economic growth, or even the stock and currency markets, they will all tend to move in a positive direction. Basically, everything is heading that way. So overall, I think whether it's Daily or Mester, they're both telling everyone that there's no need to be overly concerned about inflation at the moment. But as for rate cuts, is it really going to happen? If it has to be in December, and if they're going to cut rates that aggressively, that's still a big question mark right now. Also, Bank of America mentioned that the momentum for inflation in October has started to slow down. But with the market entering the seasonal discount period, prices still need to be watched closely, and the key point is that they believe there hasn't been any abnormal trend of excessive price fluctuations. So you can see, whether it's Fed officials or investment institutions, they all basically come to the same conclusion. At present, inflation is not out of control. And as for whether there will be another rate cut in December, the approach is cautious, and that's basically the direction things are heading. So whether or not there will be a rate cut in December is still under observation. As for whether the US government will reopen, I'll say the same thing as before. We talked a bit yesterday about the Senate's temporary funding bill, which has already passed. Now it goes to the House of Representatives. Will they vote? Right now, it looks like this temporary funding bill will likely pass both the House and Senate. If it passes, the US government could reopen, since the shutdown has lasted about 41 days, already a record. Speaker of the House Johnson also said, it's expected that the House will reconvene this week, but they won't be voting on things like Medicaid or other healthcare subsidies. Instead, on Wednesday, they'll be voting on what? On the so-called temporary government funding bill. So, about this temporary funding bill, just so everyone's clear, this bill will provide funding for the US government through the end of January next year. So if this temporary funding bill really does pass, that means the government will have money until the end of January next year. The government won't just shut down whenever it feels like it. There won't be any major issues before the end of January next year. Now, there's another important point to mention. Alright, hey, who is this? Image, good evening. Another key point is that now the market is once again concerned about something. If the US government reopens, does that mean as soon as it opens, there will be a flood of data releases all at once? For example, the non-farm payroll numbers for September and October haven't been released, and things like the weekly attendance figures also haven't been published. CPI, PPI, a whole bunch of data hasn't been released. So, once the US government reopens, will all this data come out at once? So when all that data comes out, what should we do? How do we respond? Some of it will be positive, some negative, some will meet expectations, some will fall short, so what then? Will the market see so-called gray rhino or black swan events because of this? Alright, let me tell you, economic data works like this. It has a certain timeliness. Alright, it has its timeliness. What do I mean by timeliness? Let me give you an example. Take the weekly reports on jobless claims and continuing claims. These are important high-frequency data released every week, usually on Thursdays. This high-frequency data reflects the current week's jobless or continuing claims situation, and it can directly impact market fluctuations on the day it's released. The effect is immediate. But if the jobless claims data gets delayed for 8 weeks because of a US government shutdown and isn't released at all during that time. So at that point, if you take the average from 8 weeks ago and release it, does it have any meaning? No, it doesn't, because this is high-frequency data. We look at it every week, week by week. Then, suddenly, after the shutdown ends and the data is released, you dump out all the numbers from 8 weeks ago, 7 weeks ago, 6 weeks ago, 5 weeks ago, all at once. Does that have any impact on the market? Honestly speaking, it won't have much of an impact. Why? Because data is time-sensitive. You have to remember that data has its own timeliness. When we say data is time-sensitive, it means once it's passed, it's passed. Even if you release this data, whether it's from a week ago, 2 weeks ago, or even non-farm payroll data from a month or 2 ago, when you look at it again, the market tends to take it more neutrally, because those 1 or 2 months have already gone by. Even if the non-farm payroll data isn't released, the market still moves on. So, if you release it 2 months later, and let's say the data turns out worse than expected, at most the market will have a slight fluctuation, like, oh, so the non-farm payroll performance in September 2 months ago wasn't good. That's how it was. So the recent rise might have been a bit fake, huh? Let's make a small correction. It would probably just cause this kind of, at most, minor fluctuation. But will the market really react strongly, like, oh, this was from 2 months ago, so let's bring it up again and do something about it? Rehashing old news like this won't really happen. But now that the US government has reopened, the latest figures, like the most recent employment or continued employment numbers, or the latest CPI, PPI, or even the newest non-farm payroll numbers, these will definitely be more important than the data that wasn't released over the past few weeks. They're much more important. So remember, when the US government reopens and data comes out, don't panic or ask, this was released 3 weeks ago, that one 5 weeks ago, should we look at them? You don't need to. Just focus on the latest data, that's enough. Remember, economic data is time-sensitive. Who is this? Good night, and who is this? Louis. Oh, Louis. Hello. Let's keep going. Besides the House of Representatives reopening and the shutdown not lasting long, and aside from how we look at delayed data, there's something else. In the US, over the past 10 years, the unemployment rate has been about 4.1% and hasn't really changed. The terminal rate is 3.7%, and the number of rate cuts is still about 0.6 times. Based on these numbers, the interest rate, terminal rate, and number of rate cuts, so far, things look the same. This year, and by 2025, it should be set. As predicted for everyone at the start of the year, there will likely be 2 rate cuts, one in September and one at the end of October. That's it. You might ask if there will be another cut in December. Right now, it looks possible. There's a lot of wait and see going on. But regardless of what they do, as more economic data gets released or new events happen, we'll keep tracking things. For now, judging from the number of rate cuts and how yields are performing, it's possible there won't be a rate cut in December, but there will be cuts next year. We can still look forward to next year's rate cuts. The US dollar index edged up 0.06%, again meeting resistance at the 200-day moving average and pulling back, but it remains above the 20 and 50-day moving averages. Overall, it's still in a sideways, choppy pattern with little change. Additionally, regarding geopolitical risks, this news has already been seen, so just take note of it. Yesterday, China announced that it would suspend its export controls on rare earths for 1 year. They won't be enforcing those controls for now. Of course, Trump also said that the Section 301 investigation into China's shipbuilding industry would be suspended for 1 year. This includes things like China suspending passenger taxes and port fees for ships. But honestly, all of this is old news. It's not like it was just announced yesterday or that there's some new development. In fact, this actually dates back to, I'd say, the end of October. Back in early November, when both sides, the US and China, were negotiating, they had already discussed these topics during the second round of talks. So, this is basically just old news being brought up again. Right after the negotiations at the end of October, the talks wrapped up on the same day as APEC. At APEC, didn't Trump and Xi Jinping have a conversation? They talked, and I still remember that day clearly, because you know what happened that day. That day, the two of them talked for 100 minutes. I remember it clearly. Trump and Xi Jinping spoke for 100 minutes at the APEC leaders meeting. After they finished, Trump flew back to the US. The reason this stands out so much in my memory is because he didn't stay to have dinner or chat further with Xi Jinping. He said he wanted to go back home for Halloween to be with his family. I'm sure everyone remembers that, right? I even mentioned it to everyone that day. Halloween is the Westerners' ghost festival. Saying you want to spend Halloween with family is like us, as Easterners or Chinese, saying we want to be with family during the ghost festival when making offerings to spirits. If you said you wanted to be with family then, it would sound strange, right? So he used this excuse to go back. That means the US-China trade war hasn't covered everything in detail. They've only reached some preliminary negotiations and agreements. So what did they agree on? First, export controls, like those on rare earths. They agreed not to enforce them for a year. Also, the 301 investigation into Chinese shipyards has been put on hold. That's pretty much it. That's about all there is. As for Trump saying they're very close to lowering tariffs on India and reaching a trade agreement, just take that with a grain of salt. Just listen and don't take it too seriously, because there are still a lot of negotiations going on between him and India. And don't forget, around November 5th, wasn't there something about the US Supreme Court and some tariff-related negotiations? There were also debates going on about how tariffs are determined. If in the end the Supreme Court rules that Trump's tariffs are unconstitutional or illegal, and they can't be enforced, then of course the pressure on US prices will decrease even further. If that happens, there will be more opportunities to cut interest rates again next year. So regarding the US-China trade war, I think that in the coming year, things probably won't get much worse. Over the next year, it shouldn't get significantly worse. Because, as I said before, next year the US will be focused on elections for both the House and the Senate. Both the Republican and Democratic parties are under election pressure, so they won't dare to mess around too much. Next year will come very quickly. In just a month or a month and a half, it'll be 2026, and then they'll be facing what's called the US election year. So as long as there's any unexpected disturbance or sudden change, in fact, isn't necessarily good for the election prospects. Of course, this is the case for political parties all over the world. It's the same in the United States, and actually, it's the same in Taiwan too. Every election year in Taiwan, whether it's for county and city mayors or the presidential election, do you think the stock market will perform badly that year? It won't, right? If the stock market does poorly, if there's a downturn, what will the voters do? They'll vote for the opposition party. So whenever it's an election year, whether it's for county and city mayors, legislative elections, or especially the presidential election, right? These are all elections. In the election year itself, or even the year before, the executive yuan and the government will roll out a lot of benefits. And why do they do that? To stimulate the economy and win over voters. Every country does this. Usually, in an election year, the election atmosphere and stock market performance aren't too bad, because if the stock market crashes, it's over, the ruling party might as well not run. This is the same everywhere, it's all part of the game. Of course, on the flip side, after the election is over, when it comes to the stock market, everyone is on their own. That's pretty much how it feels. Alright, moving on. As for New York crude oil prices, they're still in a bearish trend, so today they dipped slightly by 0.48%. Regarding economic data, just like we mentioned at the beginning, keep an eye on OPEC's monthly report tomorrow, and then on Thursday and Friday, watch the year-over-year numbers for CPI and PPI. These are data points that are closely linked to inflation. Now, if the US government happens to reopen, maybe on Thursday or Friday, we'll see if there are any new data releases or topics that can be provided. If not, if they can't provide them in time, that's okay too, no big deal either way. They haven't just stopped providing data for a day. It's been 41 days without updates, so it's not a big deal. I wanted to let everyone know the economic data coming out Thursday and Friday is generally more important. For earnings reports, the key ones are around November 14th, like Applied Materials, and we'll track those together. Let's circle back and talk about the industry side. Regarding Buffett. He's now 95 years old, has lived a very, very long life. At 95, he's been serving as the CEO of Berkshire, his investment company, for 60 years. So today, well, actually, to be precise, it was yesterday, he wrote a letter of gratitude to his children and shareholders. What did he say? He said that by the end of this year, that is, by the end of 2025, he will be stepping down from his role as CEO. And after he steps down, at future Berkshire Hathaway annual shareholder meetings, he will no longer write any annual letters, nor will he do annual reports, or even give annual talks. Basically, what will he do? He will hand over the reins, the communication with shareholders, to his successor, the 63-year-old vice chairman, Abel. He will hand it over to him, and he holds him in very high regard. For his donations, $1.3 billion in B shares will go to his children's foundations. In new Taiwan dollars, that's just over 40 billion. That's not a huge sum, just over 40 billion new Taiwan dollars to the foundations. Also, there's $150 billion, which he called his total assets, 150 billion US dollars. That's a huge amount. Converted to new Taiwan dollars, it's about 4.5 trillion. He plans to donate that for charitable purposes, so it counts as charity. In addition, besides expressing his support for his trusted CEO, Abel, he also advised investors not to blame themselves or dwell on past mistakes, but to learn from them, right? It's never too late to improve at any time. Carefully choose your role models and try to emulate them. These 3 pieces of advice can actually be applied in many areas, not just in investing. Basically, just remember that if you make a mistake, you should cut your losses when you need to. And then, you might be like some investors who prefer short-term trading, getting in and out quickly. In that case, you should look for people who are skilled at short-term trades to learn from. Some people are really good at short-term trading, whether or not they have a license, or no matter how long they've been in the market. Some people are just really talented. They excel at short-term trades in futures, options, or even day trading stocks for price differences. Some people are just really good at it. But that's not me. I have to admit, I'm really not good at day trading. Because I really don't like doing such short-term trades, and honestly, I can't really predict how to do those very short-term trades well. Futures might be a bit different, but when it comes to stocks, like day trading, honestly, that's really not my strong suit. It's just not what I'm good at. So if your investment style leans more toward day trading or short-term trading, then you should remember to read books about short-term trading or check out the ideas of some experts who specialize in short-term trading. You can try to imitate and learn from them. They can do it. But short-term trading has its own risks, so remember, if you make a mistake, cut your losses quickly and decisively. Alright, so for long-term trading, take someone like Buffett for example. Buffett probably takes a long-term approach, and when the stock price is below its investment value, when it's been unfairly beaten down, he gradually builds his position, bit by bit. Then he holds on to it, sometimes for 5, 10, or even 20 years. For instance, Buffett holds a significant amount of shares in companies like Coca-Cola, Apple, Bank of America, Chevron, and so on. These are all companies where he holds significant positions. His core holdings make up about 60% to 70% of his portfolio, and they're mainly these 5 companies. Of course, everyone has different goals, but you can definitely learn from his approach. So, why is Buffett so impressive? Honestly, I think Buffett, he's now 95 years old. Let's talk about something a bit more realistic. He's 95 years old. Even though he still holds the position of chairman, how much longer can he really continue? No one knows how much longer he'll keep going, but he's already lived a long life. If he can say a few more words at meetings, or keep doing it a few more years, we can keep learning from him. That's impressive and good. It's worth looking back at past meetings and studying his investment ideas. I think there's still a lot we can gain from this. So why is Buffett called the Oracle of Omaha? Actually, there's a statistic I'd like to share with everyone. From 1965 to 2024, that's a full 60 years, during his 60-year tenure as CEO, his annual compound return rate was about 20%. An annual compound return rate of 20%, some might think, that's not much. They could say, in 2023 and 2024, the stock market was in a major bull run, and in 2025, it's still a bull market. My returns have been over 50%. That means I'm better than the Oracle of Omaha. You're outperforming the Oracle of Omaha. But how did Buffett achieve that 20%? You know, that 20% isn't just about making 20% every single year. No, that's not it. From 1965 to 2024, over those 60 years, what does annual compound return rate mean? It means that on average, every year, he made you a 20% return. Every year, on average, he made 20%. So what does it mean to make 20% every year? For example, if you invest 1 million today, this year he helps you earn 20%, so you have 1.2 million, right? Next year, with that 1.2 million as your principal, he helps you earn another 20%, so that's 1.44 million. With 1.44 million, in the third year, he helps you earn another 20%, so it might be over 1.6 million. That's how it works. It keeps increasing at this kind of geometric progression. 28, 28, 28, 28, 28, 28. Basically, on average, every 3.6 years, your assets will double. If you invest in Buffett's company, invest in Berkshire, he helps you grow your money so that, on average, every 3.6 years, you double your investment. And there's an even more impressive figure. if you had invested $1 in Berkshire Hathaway back in 1965, by 2024, over these past 60 years, how much would that $1 have become? I think it was something like $50,000, if I remember correctly. It was around $55,000, about 55,000 times growth, absolutely incredible, really mind-blowing. So, don't think, wow, teacher, my investment returns have been really high these past couple of years, like 30% or even doubled. That's just short-term. If your annual return rate can consistently be 20% year after year, that's what's truly impressive. That's why, out of the world's 8 billion people, there's only one person called the God of Stocks. Because honestly, no one else can do it. Maybe you made 20% last year, but if the market isn't good this year, you could lose 20%. Then maybe the next year, the market improves and you make 15% or even double your money. But if you average it out, if you calculate your compound annual return, your annualized return might be only 5%, so on average, it's just 5% each year. But Buffett manages to do 28% every single year. Yeah, he's really impressive, especially in this area. By the way, good evening, May, long time no see. Xiaolong asked whether long and short investments in Bitcoin will affect the US. As for the long and short trends of Bitcoin, I still think that the movement of Bitcoin, well, Trump really likes Bitcoin. Trump and his family, they're all into digital currencies. There's Trump coin, Melania coin, and a bunch of others. Actually, I think Bitcoin is more like a speculative commodity, kind of like an alternative to physical currency, a substitute product, you could say. Its volatility is also really high. So, whether you want to go long or short on Bitcoin, or trade it at all, that's really up to each person. Personally, I'm not very good at it, and I don't particularly engage in Bitcoin trading myself. As for whether it will affect the trend of the US stock market, I don't think so. Usually, it's the trend of the US stock market, changes in the economy, interest rate levels, and the strength of the US dollar index that affect Bitcoin. But if you're saying that the ups and downs of Bitcoin would then influence the US stock market, that's just not the case. The cause and effect relationship is different. So, this is my answer to Xiaolong's question. Alright. Now, let's take a look at Nvidia. Of course, yesterday Xiaolong seemed to ask about Nvidia again, saying that some investment institutions are shorting it. So, how should we really view Nvidia? It was Citibank, right? Citibank. Yes, let me explain this to everyone and add a bit more. If you're buying Berkshire Hathaway stock, you really need to look to the future now. The new chief investment officer is Abel. Whether Abel can deliver annual returns of 20% like Buffett did, right now, I just don't see it. No one knows at this point, no one knows. It could be higher than 28, it could be less than 28, nobody knows. He needs at least 3 to 5 years of observation. During this observation period, the market is watching, so the stock price performance probably won't be that great, simply because everyone is wondering about him. Even Buffett has stepped down, so the question is whether Abel can perform as well as Buffett. If he can't, then the stock price will drop, and financial reports might not look as good. This is similar to when Tim Cook, Apple's CEO, took over. It's just like when Tim Cook took over Steve Jobs' position, exactly the same situation. Back then, when we talked about Apple, the founder and innovator behind the iPhone, Steve Jobs, his presence as CEO or founder was incredibly strong, and his personal image was very distinct. So, working under Jobs, or even taking over his position in the future and surpassing him, was really, really difficult, because everyone. There will always be some of Steve Jobs' imprint left behind, so honestly, the pressure on the person taking over his position is huge. But at least, looking at it now, after more than 10 or 20 years have passed, you'll find that Tim Cook, at least at Apple, has done a remarkable job running and operating the company. Honestly, his performance is quite impressive. Although his path of development is different from Steve Jobs, he has his own strengths and his own moments of glory. He's achieved great things as well. So, this same idea applies to the companies under Buffett's Berkshire Hathaway too. Abel, now taking over from Buffett, will likely be watched by the market for a while, since Buffett's brilliance is so strong, he's very eye-catching. If you want to work under the Oracle of Omaha, or even hope to surpass him, remember, his annualized return is 28%. Investment institutions all over the world are scrutinizing Abel with a magnifying glass, so I believe the pressure on him is immense. That's why it will take some time to slowly observe whether he can really handle it. So, as for this company under poker, the student has surpassed the master, but it will still take some time. Alright, now let's look at Nvidia. Nvidia, of course, has performed quite well. Anyway, both are respectable and worth choosing. Citibank has also raised its target price to $220. They believe that the slowdown in growth is not because AI demand is weak. They don't think there's an AI bubble. In their view, the only reason for the current restrictions on NVIDIA's revenue and profit growth is that the supply chain of packaging plants like CoWoS cannot provide the necessary production capacity in time. So, as a result, AI chips are still expected to be in a state of excess demand over supply at least until 2026. He also mentioned that NVIDIA's current price-to-earnings ratio is still quite low, only 28 times, which is lower compared to AMD or Broadcom. So, at the moment, NVIDIA still looks pretty good. Fundamentally, I still think there aren't any major issues. As for the technical side, although a couple of days ago there was an investment firm, actually, the famous short seller, Michael Burry, right? He shorted NVIDIA and also shorted Broadcom. After the short selling, the stock price has been pretty average and has been dropping recently. But when it dropped to the quarterly moving average, it also saw some support. So at least from a technical perspective, I think this quarterly moving average, the 50-day moving average, still has its support effect, and that hasn't changed yet, unless one day this moving average. If it drops below and keeps falling, support could become resistance, so be careful. For now, that hasn't happened. Both the 20-day and 50-day moving averages still provide support. After finding support, as I mentioned yesterday, the stock rebounded sharply and rose 5.8%. For this earnings report, let's wait, as results will be announced November 20th. The performance should be good, still something to look forward to. It's just that the performance is something to look forward to. Remember what I always say, if the earnings report beats expectations and hits a new all-time high, remember, if there's a surge, sell once first. On days when the price surges at the open, it's easy for it to open high and then fall, so sell once first. Then, if it pulls back to the 20 or 50-day moving average, you can buy back in at a lower price. That's how you should use this 20% cash position for now. When it comes to short-term trading, a good approach is to get in and out quickly, just keep it short and nimble. Also, regarding Quanta's so-called little golden goose from its investments, called CoWeave, actually, its third quarter revenue and earnings reports have been quite good. The losses per share, EPS, have also been narrowing. And the backlog of orders, totaling 55.6 billion, is also looking very good. But there is a negative factor, and this negative news has put quite a bit of pressure on its stock in the US pre-market. What is this negative news? It's that one of its clients, a data center developer, has experienced project delays, which has had some impact on the company. They didn't specify which data center it was, they only mentioned that it affected revenue and profits. Because of this impact, their total annual revenue this year will be around $5 billion, which is lower than their original forecast and also below market expectations. So for companies like this, you have to remember that AI companies can't tolerate even the slightest bit of turbulence or anything that falls short of expectations. As long as there's even a slight miss in expectations, or a bit of cost pressure, or if there's any issue with their ability to take on debt, people will start to pay attention. For example, with companies like Oracle or OpenAI taking on so much debt, people wonder if they might not be able to pay it back, or if they can handle it. When even a little bit of turbulence or doubt arises, these highly valued stocks are very likely to experience significant volatility and corrections. So it's the same situation here. Although their financial report was pretty good, because their full-year revenue was revised downward, yesterday the stock only rose slightly by 1.54%. But today, before the market opened, there was relatively more pressure. Again, if you look at this neckline, the blue neckline above, since July this year, the stock has touched it about 3 times, and each time it failed to break through. It's touched it 3 times and hasn't managed to get past it. What about going forward? When it comes to the neckline area, I still recommend selling once it reaches there. If it breaks through, we can discuss it then. The reason for more pressure today is that both the 20-day and 50-day moving averages are acting as resistance above the price, and both are sloping down, so keep an eye on that. So as for today's stock price, as long as it doesn't break below the previous low from August, there's no need to worry. But if it rebounds and gets close to the moving averages, I still suggest trimming your position a bit. Although the revenue isn't a big problem, and it's not that bad, the full-year revenue outlook has been revised downward. Now, regarding this so-called little golden goose from Huida's investment, yes, they invested $4 billion, and Huida holds a 91% stake. They just kept buying and buying, spent $4 billion, bought a lot. It's true, NVIDIA is making money, and of course, COVID is making money along with it. But after all, there's still a difference between the mother hen and the chicks. If you really want to invest in some AI companies, the more stable choice is probably still something like NVIDIA. I'm talking about AMD and companies in this area. I still think they're relatively stable. But when it comes to investing in these core wave companies, they're more about hype. When there's a hot topic, the stock is likely to go up, but if there's no buzz or their revenue falls short of expectations, the volatility will be higher than that of Nvidia, the mother hen. So everyone should pay a bit more attention to the associated risks. Lastly, let me mention Starbucks. Ever since their buy one get one free deal for Halloween at the end of October, I bought 2 drinks that day, actually 2 alcoholic ones, so it was like getting 4 to take home. We drank so much, it was almost too much. It was really great. What about the Starbucks union? What are they saying? People might not be able to buy or drink Starbucks. Why? Because they plan to launch the biggest strike in history this week, since they couldn't reach an agreement on wages and benefits. When are they targeting? They're targeting Starbucks Red Cup Day. What is Red Cup Day? It's meant to go along with holidays like Christmas. During the holiday season, Christmas is all about red. So, when you drink Starbucks, the cups aren't always white. They're usually white with blue designs printed on them. Who is that, anyway? That's not a mermaid, right? Who is the woman on the Starbucks logo? Is she a witch or something? Like, does she have snakes on her head or something? I'm not sure. Anyway, that logo, that woman on the Starbucks logo, she has a name, right? I just can't remember what her name is right now, but she's definitely not a mermaid. So, who is she? I've forgotten too. Anyway, my old Starbucks cup wasn't white with green letters, right? But when it's the red cup season, it turns into a red background, a red base, so the cup is red. Besides that, on Red Cup Day, Starbucks also gives out cups to people who come in to buy coffee. Why do people who buy coffee get a cup? Well, that cup can be reused. The reusable red cup represents the annual Red Cup event. Of course, there are also some special deals and promotions that go along with it. So every year, when Red Cup Day comes around, a lot of people go to Starbucks to buy coffee. And on that day, Starbucks does especially well in business, and the employees are super busy. They're super busy, but does that mean they get paid a lot more? Not necessarily. They're just extra busy. So, the union might choose to go on strike on Red Cup Day. If they strike on Red Cup Day, what does that mean? This union represents 550 Starbucks stores across the US, and its members have already authorized the union to launch an indefinite strike. And as for the strike date, they might target November 13th. This year, Starbucks Red Cup Day is on November 13th, so they're considering striking then. Why? It's Starbucks' busiest day, business peaks, and everyone comes for promotions. If they strike that day, the impact could be greater because upper management will really worry. So you might ask, does Red Cup Day happen all over the world? I'm not really sure. I don't know if it's Red Cup Day everywhere, but in the US, Red Cup Day is a big deal. I don't think I've ever heard of Starbucks having a Red Cup Day in Taiwan. Of course, Starbucks in Taiwan is different. Starbucks in Taiwan isn't owned by the US parent company anymore. They've already sold it to Uni-President Group. So, you might wonder, since Starbucks in the US has Red Cup Day, does that mean Starbucks in Taiwan will have the same event? So far, no. We haven't heard of anything like that yet. But as for buy one get one free promotions, those are actually held pretty often in Taiwan. Now, back to the topic of the strike. Will the strike have any impact? Of course a strike will have an impact. If they really don't reach an agreement by November 13th and start striking in 25 cities across the US, it's definitely going to have an effect. There will be some impact, more or less. But will it make Starbucks EPS suddenly go from profit to loss? No, it's not that serious. It's just sporadic strikes, isolated incidents. So does the strike have an impact? Yes. The extent depends on how long and widespread the strike is. For example, at Boeing, aren't Department of Defense employees on strike? That could affect over 3,200 people, if I remember correctly. Over 3,200 people are on strike, and they may still be striking since negotiations aren't settled yet. Does this have a huge impact on Boeing's revenue or profits? Not necessarily, as it may be limited to the defense division, the part dealing with missiles or F-35 and similar aircraft. There will be an impact, it will affect them to some extent, but it might not have a major impact on the whole company. So, it's the same with Starbucks. If they really go on strike on November 13th, it will have an effect, but how long the strike lasts depends on how much it affects the company and how serious it is. We're taking a neutral view on the Red Cup thing, since it's happening in November and it's coming up soon, just the day after tomorrow. By then, we'll know the result and things will settle. Also, there's the twin-tailed siren, the mermaid logo. Alright, Starbucks, that's the female siren, right? But the female siren isn't that one. Oh, not the one. What's it called? The one whose hair is all snakes. What's that called again? Is it Medusa? Isn't there one like that? I mean, in Greek mythology, isn't there a woman whose hair is all long snakes, a bunch of snakes, and if you look into her eyes, you turn into a statue, you turn into stone, right? That's one of them, isn't it? That one. Is it boring? Or is it not Medusa? She doesn't seem to be the one on the Starbucks logo, right? The Starbucks logo is a mermaid, isn't it? Thanks, let's move on. Alright, let's look at life. There are ups and downs every day. We all just try to follow Buffett's pace. Medusa, right. Thanks Jeff for that reply. Now, let's look at Starbucks. Starbucks stock price dropped about 1.13% yesterday. Honestly, that's not much. They're just consolidating, that's all. So as for this strike issue, I'll just draw this neckline here. As long as this blue neckline isn't broken, it's no big deal, it doesn't really have much impact. But you might ask, does Starbucks perform as well as those AI companies like AMD or Nvidia? No, it doesn't. After all, it's just a consumer staple, a defensive company. Plus, remember how the US was having a tariff war with, who was it, Brazil? And what does Brazil produce a lot of? In the US, I remember that over 50% of Bob's coffee beans come from Brazil. And Brazil's coffee beans were hit with a 50% tariff by the US, a 50% tariff. So, does this affect Starbucks? Of course it does, at least to some extent, because your costs go up. So, these kinds of tariff wars can have a more direct impact on consumer goods companies like Starbucks, Nescafe, McDonald's, or on staples at Walmart and Costco. The impact on these everyday goods is more immediate. But of course, as these tariffs gradually settle and more countries reach agreements, the situation will slowly stabilize. These companies that were relatively weaker might gradually get back on track in terms of their revenue and profit performance. So, as for Starbucks, just keep an eye on it for now. As long as it doesn't break below this neckline, there's no need to worry. But if it really wants to perform better, at the very least, it needs to close steadily above the monthly and seasonal moving averages, and those moving averages need to turn upward from a downward trend. Only then is it possible, like what happened in April and May this year, to see at least a small upward wave. But at the moment, it doesn't look like there's much of a chance. Right now, the opportunity doesn't seem great. About Starbucks, there's the Big Mac Index. Is there a Starbucks Index? I don't think I've heard of that before. I'm not sure if there's a Starbucks Index. What do people mean by the Big Mac Index? It's about comparing prices in different countries, like how McDonald's has the Big Mac burger. I like eating Big Macs too. When Starbucks has a buy one get one free deal, I'll buy it. If not, I won't, because Starbucks is expensive now. One cup is like $150, $160, $170, even $180. If there's a special deal on Big Macs, they're tasty too. So, the Big Mac is just. It's 2 layers, a double beef cheeseburger, double beef, and with 2 layers it tastes really good, it's a great combo, and eating one is pretty filling. So, the so-called Big Mac Index is that every country has McDonald's, right? And it's based on, well, the Big Mac burger sold in each country. What do you compare it with? You compare it with its price to see the cost of living. Here's a simple example. In the US, a Big Mac, just the burger, might be $3. $3 is about 90 new Taiwan dollars, so ordering just the burger might also be about 90 NT dollars. But the same Big Mac. In Taiwan, ordering just one might cost 120 NT dollars. So that means, for the same Big Mac, the same product, but in Taiwan the price is higher. That's basically the idea. Now, you might ask, is there a Starbucks Index? It seems like there isn't one. There's no such thing as, say, how much a cup of hot latte sells for in the US versus in Taiwan. There doesn't seem to be anything like that. But there's one thing I'm pretty sure about, and that is, honestly, prices in Taiwan are still quite high. A lot of things in Taiwan are sold at pretty high prices. Compared to other countries, not necessarily the US, but countries like Japan or Korea, some of the same things are still really expensive when sold in Taiwan. It's really expensive. For example, let's say you buy certain medicines at a Japanese drugstore, like eye drops or painkillers. They're priced in Japanese yen, say 200 yen. In Japan, they sell for 200 yen, but when they're brought to Taiwan, they're sold for 200 NT dollars. Basically, they're taking the Japanese price and converting it straight to Taiwan dollars. Something that costs 200 yen in Japan becomes 200 NT dollars in Taiwan. The price difference is huge. That's about Starbucks. Lastly, let me share a bit of information with you all. This is related to Apple. The information, this media outlet reported that the sales of the iPhone Air are currently looking pretty bad, and that Apple might not release the second generation, the Air 2, next fall. Also, Apple is now cutting back on the production and manufacturing lines related to the Air. Foxconn. I used to work at Foxconn, you know, over at Hanhai. Foxconn is expected to stop production by the end of November this year. Luxshare Precision, which also has some connections with Foxconn, is in a similar situation. The founder of Luxshare Precision, you know, used to be a production line supervisor at Foxconn, a line leader, actually. She started as a female worker and worked her way up to line leader, and then later branched out on her own. Sometimes, Luxshare is really impressive. I'll talk more about it with everyone when there's time. So, as for Foxconn and Luxshare, they said their production lines will stop by the end of October. But for the hot-selling iPhone 17 Polo series, there are still dozens of production lines running. So if the Air doesn't sell well, there's no need to overreact or worry too much. You don't have to focus on the Air's poor sales, because what's really making Apple a lot of money right now is the iPhone 17 Pro series, like the Pro Max, the Pro, and so on. Even the standard version is selling really well. So looking at the big picture, I think this doesn't affect the strong sales or profitability of the iPhone 17. That's why Apple's stock price still seems to be moving toward new highs. Alright, let's take a look at some questions from the audience. Also, someone asked about IGTO in the US stock market. I'll probably only be able to answer that tomorrow. Alright, should we exit completely or just sell half? And what about Japanese stocks? There are a lot of questions about those too. If you've bought a bunch of Japanese stocks, remember this, both the Japanese and Korean stock markets are still in a bull phase right now. That's right, whether you're buying Japanese stocks, Korean stocks, or even US stocks, everyone needs to keep this in mind. Since Caesar just asked about some related stocks, I want to remind everyone of this. Everyone's position size is definitely different, right? And everyone has their own approach to position sizing. Pressure points for losses and stress tolerance differ for everyone. Some go all in, some build positions gradually, others diversify. Whatever your approach, Japanese, Korean, US stocks, good or bad companies, always set a stop-loss price. For some, a 5% loss is too much, for others, it's 10%. Some have more capital, maybe family farmland or real estate, so they might not set a stop-loss, or set it at 99.9%. Fine, it doesn't matter, but you should still set a point. If you don't want to set a stop-loss, that's okay too. But if you do want to set a stop-loss, just remember that the stop-loss range must be within what you can handle, and once it hits the stop-loss price, you have to cut it immediately. Once it hits the stop-loss price, just cut it, that's the right thing to do. Otherwise, if you don't act on your stop-loss price, then setting it is meaningless. If you're not going to use it, why bother setting a stop-loss at all? The key point is how to cut when the stop-loss price is reached. How should you cut? Don't cut all at once, that's right, don't cut everything in one go. I often tell everyone, when you're taking profit or stopping loss, remember, after you've set your price, don't cut everything at once. When your stop-loss is triggered, what should you do with the price? Sell in batches, maybe a quarter or a third at a time, take profits in stages. The same applies to stop losses. If your stop loss is set at 10%, act when it hits that point. Once reached, take action. Don't just watch it drop 20 or 30% and then want to sell but can't bring yourself to do it. Originally, you could have taken a small loss, just a superficial cut, but now it's like cutting to the bone, and you still can't sell. If it drops 30, 50, or 90%, will you really sell? You won't. If you can't sell at 10% loss, you're even less likely to sell at 90. So what should you do? As long as green hills remain, there will be wood to burn. Sell in batches. When it drops 10%, it hurts, right? Just sell 10 or 20% in batches. If it drops another 10 or 20%, sell another batch. Sell in batches, keep selling off in batches over time. In the end, your cost and your position will definitely be better than if you never set a stop loss at all. So this is just a simple tip I wanted to share with everyone. As for whether this method is good or not, it really depends on the individual, it's up to you. Basically, this is how I do it, so it's personal preference. Alright, now, as for US stocks, in the pre-market, the first company that's up by 5% is Jacob Solutions, and then there's Skydance, which is merging with Paramount. Skydance is up 5% pre-market. Disney is up 0.83% before the market opens. H&R Block and Merck are both up about 0.5% pre-market. Halliburton is down 2.71% before the market opens. Nvidia, Western Digital, Dell, and Micron are all seeing slight drops pre-market, ranging from 0.9 to 0.1%, up to 1%. Oracle and Qualcomm also dropped by 0.88%. The US stock market today will probably be volatile. The market went up yesterday, so today it's likely to be a choppy session. The bullish structure hasn't changed, it's just keeping its pace, so there could still be spikes. Taking some profits at the highs and then buying back at the moving average for a price difference is still the safer strategy at this stage. As for the Dow Jones Index, it rose 0.81% yesterday and stayed above the monthly moving average. The Philadelphia Semiconductor Index surged 3.02% yesterday, climbing back above the monthly moving average as well. As for the SOX Index, it also had a big gain yesterday, up by about 12.8%. Nvidia also continued to surge yesterday, climbing back above the 20-day moving average. In this current period of earnings reports, just as I mentioned before, only Broadcom hasn't announced its results yet. Broadcom's earnings report will be released on the morning of November 20th, so everyone should make sure to keep an eye on it. As for whether this index, and the US stock market in general, can keep the AI theme going, the Magnificent Seven still play a very, very important role as a leading indicator. So if you're not sure what to do, just focus on investing in the world of AI and the AI industry. The Magnificent Seven have extremely strong moats in their respective sectors, so if you're unsure about your next move, investing in ETFs or index funds is actually a very good option and investment target. Alright, that's all for today's group content. Before the US stock market opens, we'll keep bringing you the latest updates. Please like, subscribe, and share. If you have questions we didn't answer, we'll cover them in tomorrow's session. Wishing everyone smooth trading. See you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.